Hello, hello. How are you? How's everybody? I think my mic is working. I hope so.
Oh, okay. So trying to figure out. All right, Eva, aloha. I'm in Hawaii.
Oh, where in Hawaii?
Kauai, Anini Beach.
Oh, that must be amazing, especially for the Thanksgiving holiday, right?
It is. So my brother lives here on North Shore, and we try to come out and visit him. This is our second time this year, which is beautiful.
Wow, that is
I've
beautiful.
had some really nice trades the last couple days, but curious to hear your feedback on how things are going in the market.
I know. Let me get back to QQQ because that's the one that I still have a runner at. It's amazing. So around here, around 580, I think I got in around like 590 something, almost close to 600. Because saw that ES was trying to bottom near, I believe, 6450. It got down to like what 6425, I think. That was like the low of last week. Let me see.
Oh, and I didn't mention this, guys. I've got two streams running right now. So I've got Starlink running the ES live stream, and I have Eva's charts shared here on Zoom. So I do have two. If you want to watch both of them, you need to pop one out and then re-add the second one, just as a reminder, which I feel like it's redundant to say that, but I also know that there are new members here. So just making sure.
Awesome. Yeah, so just looking at it, it's just once I started to see like that hammer form, after a doji, usually when you have a downtrend and you get a doji, it kind of really tells you indecision as to where the bulls or bears are fighting. So I usually wait until the next candle, and once I saw that hammer, um, I felt like it was at least having a chance to retrace about 50% of the move around right where we kind of are right now. And now we're kind of at an inflection point because if we are able to break above 614, we're pretty much targeting these the all-time high. So I decided, I think originally I played was 6950 on XBX. For QQQ, I was looking at 620 calls, but I pushed it to 700 just because um I'm banking on the Santa's rally after we
Well,
have.
and so I know what your chart looks like to the left, but I think it's important that members see that. So if you can zoom out just a little bit to be able, this is a
Messy, just a little bit.
full flag. Flag. Yep.
So nice. And like we got that 50% retracement around here. So now we just kind of like have to see, are they gonna chop it and then move it at the end of December? I mean, not beginning of December, or is was it Black Friday? I think Black Friday, is it a full trading day or half trading day? I forgot.
It's half.
It's
It's
half.
Yep.
Usually half days. I'm pretty sure a lot of the real traders are on vacation already. So
Well, they're all on vacation. Everyone's on vacation except us. I mean, I'm on vacation, but I still trade. But yeah.
yeah, so just looking at it, I'm just like, yeah, there's no need to trade on Friday. So I'm gonna end my day today.
Now,
Um,
I will say that we're sitting here at 985,000 contracts traded on ES. This is where we ended many days in the last year and a half as the end of the day, not middle day. So kind of interesting. But yeah, definitely.
it looks like we're gonna retrace back to all-time high. We may just flag a little bit and consolidate just to like reset after this major move. Then ultimately I think we're gonna test all-time high. I'm thinking in Q1 is what I'm thinking we should test all-time high, barring we have a crazy Santa's rally, which we had an insane move, I'm not gonna lie, since last week, since this retracement. So it's gonna be interesting to see just how the price action is for heading into December. But the biggest one I'm waiting for is this one. This is when I played. I got stopped out, I think my half position when it pulled back to the low of this morning. But look at how beautiful this is. And even if you pull it on the daily, look how this looks like. Like Caterpillar looks so prime for a push higher back to like almost 600. So I have a limit.
Well, and let's talk about why you're looking at Caterpillar because I think there's some that may not understand what that
Oh,
means. So there,
because,
Caterpillar is the tractors, right?
yes, and IWM was showing relative strength before SPY and QQQ picked up. So CAT is one of the holdings for IWM. Same thing with banks, and I saw banks also reversing. So JPM and Goldman Sachs was actually holding fairly well in the down market. So I was looking at a really decent move, and it finally broke out. I have a limit order at $2.20 right now on Caterpillar. I'm hoping to get it filled. The 6:30 calls 12.19. Just to give a room, my target is this 596 to 600. So definitely I'm hoping I get filled, finger crossed, because the bid and ask are just a little bit wide and it's already making a high of the day, so I'm just trying to limit order not to.
And they're usually like that on Caterpillar, right? CAT.
It's same thing for like Eli Lilly too. It's very the spread was very wide. I saw it I think about like an hour ago. The price of the contract were like $2.10. But then I had to go finish up some day job stuff, so I missed it. So now that I'm back, I'm trying to do a limit order around 220. I did see some people fill at 225, but I'm trying to be patient just because Nissy is looking like they're going to pull back. So I may be able to get it around 220. It may go down to 210 is what I'm thinking as well, but it's holding very strong. But just seeing Caterpillar, even on the weekly, like I think this is good for a bounce. We
Yep.
have like 3 weeks to pull back, a bounce. A doji represents indecision and
Just textbook bull flag right there. Oh
exactly.
my
So
goodness.
I think this swing is definitely going to be good. It's just depends if I could get a fill. I am looking to swings. Even if we have a pullback on Friday, I'm not worried. As long as we're not taking out 555 or anything, I think it's a good shot. This one's gonna pay us well. Same thing like QQQ. So.
So talk about why you're looking at Caterpillar because I think that will be helpful for members to understand.
Oh yes. So I was looking at Cal. So originally it wasn't on my radar until I think one person DM'd me about asking like what were some stocks for IWM. So I looked at banks, I looked at Caterpillar, I looked at what's the other one I looked at? I don't look at I don't IWN that much, but I did also look at CrowdStrike. I also looked at Eli Lilly, and then I try to see which stocks are really in that IWN that's showing strength. So I saw Caterpillar, I saw banks, and looking at the banks is already showing a similar setup, but Caterpillar just looks a lot better because it had like a really nice bottom that kind of carved out, which would be this.
Oh, and guys, I'm long ES 60
Right here.
6833 6833. Yep.
It kind of
Okay.
carved
Go
out
ahead.
here. So it's very textbook. If you look at JPM, it's not as clean as Caterpillar. So if you look at Goldman Sachs, not as clean, right? But if you look at Caterpillar, you're like, oh, this one looks a lot better, you know? So sometimes certain setups look a lot better than others. So Caterpillar is definitely on my radar. I know another one that I was on Flow. This one's a little bit more risky just because it does follow Bitcoin. Bitcoin has started to show some sort of a bounce, but it's still within the inside week. If you pull it on the daily, really nice hammer here, and now it's just trying to curl back to the 90K range. I own MicroStrategies. It's one of the ones I'm just like, okay, it could really pay you if you are patient enough. Um, but other than that, if you want something a little bit more stable, not as risky, iBit from BlackRock um, is pretty good as well. The other one is I'm seeing something with gold and silver. Like gold is doing what we're thinking. Cedar is just kind of choppy, trying to validate it. That 4K range. Um, I know my
So
friend.
my worry is we're going to trade in this range for the next 15 years on gold. So just putting that out there. Okay, fine. 10 years, 8 years. somewhere in that range.
Silver is doing what
Yeah,
gold is doing.
this is some beautiful stuff.
Exactly. So a lot of fear, but overall, you can't really go wrong with VOO, the market. I like it. We broke out, pulled back and back in the range that we were just like marking out the range before. And ideally, if we close above what 620, we're testing all-time high 634. So just seeing how everything is, it's probably going to be a very slow grind higher. But barring anything
And
crazy, like
Eva's talking about VOO. So if you want to just remind everyone what that means and
um
differences between SPY and holding VOO.
oh, okay. So the difference between SPY and Vanguard, the VOO, is that both of them in common do follow and track the S&P 500, so this top 500 companies. The thing I like about VOO is that Vanguard usually has lower management fees, so compared to like SPY, they both kind of move the same. It's just SPY is traded more often than VOO. So the volume on SPY is very easy to get in and out. The volume options on VOO is a little bit harder. So if you're more of a day trader, you would gear towards trading SPY because of a lot of contracts, the volatility, the volume, easy. VOO, on the other hand, is usually geared towards people that are just holding the common stocks long term. The great thing about VOO, other than lower fees, is that you do get paid dividends every quarter. And VOO is just a big staple in my larger long-term portfolio. Like I just prefer VOO just because the management fees are very low. And I know some
They
people,
are much better than SPY. So I'm curious, now that we've talked about ECAT, do you want to compare ECAT to VOO?
yes, I was looking at ECAT. I do have it on my ECAT right here. And the thing about ECAT is that it's a different because this is a trust. The
Yeah,
other one is an
very, very different.
it's basically structured differently. So I believe for trust, depending on this one, I haven't done too much research yet, but I know usually for trust, sometimes they have to pay out 90% of their earnings. Um, I know for some trusts they do that. So that's I believe this is more for income because of yield. So I'm thinking that's how they do it with the 90% that they have to pay out to their holders. The thing about ECAT is that it's a little bit more on the newer side. VOO has a longer track record. So,
Yeah, ECAT is very new. That's the biggest thing. And I was talking about that this morning where I was like, oh, I might deploy like 2% coming into the end of the week or 2.5, as
mhm,
opposed to I don't want somebody to put half their portfolio into that because they're like, oh, there's dividends. No, how do we look at sizing in relation to that and how can that impact the portfolio?
exactly. So pretty much, if you are looking at a longer time horizon, so let's say 10, 20, 30 years, you want to be in a stock that has a good track record, you know? So VOO does have that because Um, they've been for so long, pretty much VOO, they managed for so many years, so they have a really good track record. I know BlackRock usually has the name recognition, but this is more for, I guess, for income. The problem is that because it doesn't have a lot of track record, you won't know, like you can't estimate down the line if they could keep that yield that high for you to consistently bank on receiving money or a certain amount of money every, let's say every month, every quarter, every year. It's a little bit harder compared to VOO that has a longer track record. So definitely what Cedar is saying, if you are looking to get into ECAT, put a very small percentage unless it has a proven track record like VOO. Like VOO, I have no problem recommending this stock to anyone that's looking to just hold it for a while. It's not great for people that are needing money immediately within the next year or two or looking for income. VOO is perfect for stocks, perfect for people that are looking for growth that follows the S&P 500 and is okay with index related returns, so like 10%, 12% each year. If you are looking for something higher, like 20-30%, you may have to do a mixture of potentially these high yielding funds. But you have to be careful. If you want to use it in an example, look at NEOS funds. So NEOS funds, I also known as I think YieldMax too, right? Like
Yeah.
OT, I think I remember these type of funds. The thing about them is that even though at first they guarantee a high yield, but when market downturns, they'll
Oh, just to update. So I'm out at 68.30, just to update the position. I'm out at 68.30, just to update the position.
perfect. So I just want to use this example because I know a lot of people were interested in like yield max stocks. Of course, they pretty much tell you they have high yield. So let's use OT yield. So usually when they have stuff like this where they promise, where's the yield? Usually I'm trying to find it where it says, okay, 7%. Let's say 17%, 22%. The problem is that is this stock have the best management and the track record to continually to perform and provide you these 22%. And as you can see, there is a trade-off. If you want these high yields, sometimes net asset value will go down. So if you bought at 14, imagine you bought at 14, like back in August 2024, look at over a year later, you're down like over 50%. So you have to be careful with a lot of these income funds that you I would say honestly pick the ones with a better track record. So I would say JEPI is a great one with JP Morgan. They had a really decent track record. And the other one, I remember it was like Goldman Sachs GPIX, I think, this one, income funds. If you are looking for primarily income, just the best one is usually the ones that are like 10% or less than that because usually they have a really good track record and they could these yields, these are manageable and easily obtainable. But those that are in the 22%, 30%, you just have to be very wary of them because even though they are saying they could give you that, the net asset value, NAV, might go down and you might.
And you have to look at like when it changed from 14% to 29%. This is why I'm really making sure that, yes, I love this as a potential entry. However, do not put all of your account into this.
Mhm. Exactly. So the ones that I would recommend are JEPQ, which is the one that follows tech, like QQQ. JEPI, which are similar to SPY that kind of follows S&P 500. And I think GPIX, this is the Goldman Sachs one. And if you are a little bit okay with some of the other stocks, it will be like QQM, Investico. This is another one, QQM, and then QQI. This one, a NEOS one. This one is relatively new, but it has held a lot during downturns, similar to JEPI. So just be careful of yield max ones because I've heard a lot of people that are bag holding and just praying for it to cover with the dividends, but it does have a trade-off when you're doing income funds instead of growth funds because you're trading income now as opposed to appreciation. Um, Another way to think about it about income funds is that when you're into income funds, for them to continually to hit those specific dividends or specific yield percentage that you want, they have to sell some of their actual positions, actual stock holdings. And they do this by writing covered calls. Sometimes they do cash cure puts, but usually it's covered calls and they have to write a portion of that. So some of them, like I believe QQI, they write about, I think 60% of it and 40% they actually hold it. So that's why you're able to see a bit better appreciation of the actual income fund stock price.
Well, and that's actually definitely what's happening with ECAT for sure.
Mhm. There are some I know, I think for NEOS is that they're actually doing cover calls, I believe, for all of it. So you don't get a lot of the appreciation because they don't hold the actual underlying stock because they usually sell it at the money or in the money and it gets called away. So that's a different trade-off. You have to see on their prospectus for these specific funds, like how they're trading and how are they actually calculating to get that specific yield that they're proposing or they're saying they're going to get. So I know it gets a little bit technical in there, but just pick the fund that has a better track record. And if it's a little bit too risky, then just put a very small percentage. So if you are looking for ECAT, just do a small percentage. If you're looking for growth and you're not planning to look at it for like a couple years, VOO. Because usually market goes up about 10 to 12% each year. Barring a bear market, because it does happen, majority of time the market is programmed to go higher. So I would love to VOO to stock split because I wanted to buy more because it's pretty.
Oh, I've been waiting for QQQ to split again for a really long time, so I'm not holding my breath on that anymore.
Let me see. I think it just got filled. Oh, yep. 1 second. I just got filled on my cat. I just got the confirmation. I was like, oh, cool. Just got filled. So let me get this out. It's at 2.25 right now, so it's like a $5 difference, which isn't bad. So, um, yeah, so since I got in a cat, I just want to make sure I want to break down the move. So pretty much we have a very nice flag breakout. You could also see it on both the daily because it has like this nice bottom carved out and then the weekly. So just like what Cedar says, very textbook breakout. So I am looking to take profits at all-time high, so 596. So that's the plan. So we do have a couple of weeks to see this play out, but it's looking so nice. I'm just kicking myself that I sold it in the morning when it almost broke the low. So yeah, so going back, VOO is definitely the one that I would definitely say for growth. If you aren't in any individual stocks, VOO is pretty much really hands down the one that I would recommend the most to anyone starting out, VOO. If you are looking for a little bit of a contrarian, and I wouldn't say this to start off when you're super young, but if you're like in your mid 30s, 40s, a little bit, you could scale in a little bit for SCHD. It is a dividend ETF.
Will you spell out the ticker on that?
Oh, it's Swap US Dividend Equity ETF, so SCHD. So this one,
Okay.
it doesn't move as crazy as VOO, SPY, QQQ, but it does provide you consistent dividends. So it's believe it's like 6% dividend. Let me see dividend yield. I believe it's 6%, but let me double check. Oh, never mind. I lied. I lied. Sorry. It's 3.76%. I was thinking of another one. I think that was VOO. VOO was like 6%. But you see how 3.76% is easily obtainable compared to something that's like 22%, 17%. And the thing about this is that SEHD, their holding is like quality dividend aristocrat stocks. So they're like your, I think was it like O, with the ticker symbol O. There's I believe what's the other one? It's not T-Mobile. It's another phone company that pays like really like consistent dividends. I know
Right.
what was it that one? Verizon? VZ? Or was it another one? I think
Oh, let's look it up.
yeah, there's this one. I think it's like T. Is it ticker symbol T? Wait, ticker symbol T. I think it's this one. And then the other one, oh, AT&T.
Yeah.
This is
So
like
T would be AT&T.
definitely like this one pays you dividends. I think they also have for Starbucks, Microsoft. Apple, those pay dividends, but for dividend aristocrat stocks, these are the ones that consistently pays dividends. They don't really have a reduction in dividends. So that's why something like this, a 3.76% yield, it's easily obtainable for this. So you could consistently bank on SHC to pay you at least 3.76% each year. It may not be enough for inflation, but if you count it with other stocks or if you have a lot of these shares, because it is really cheap right now, if you have like a couple thousand shares, then you could technically make a decent amount. You could also combine it with JEPQ, the JP Morgan income ETF. So there's a lot of things that you can do. I know they also do have bond funds as well. So usually how you would know for regarding bonds is that when interest rate goes up, bond prices goes down. But bond prices goes down, the yield usually goes up to manage
Well,
to make it.
let's talk about what it would look like to own a couple thousand shares of that. What would your account need to be at and go from there?
Well, if you look at it, the annual dividend is like $1.03. So if you have, let's say, 100 shares of this, you'll get about $100. So if you have a large account, you could actually make a lot more money each year. The problem is because 3.76% is not something you can live off of unless you have like a couple
Sure.
million
So,
dollars into
so
S.
if you were thinking about this from I'm starting to build my portfolio now. So I'm trying to think about it from a broad range perspective because we've got members that have been trading for 50 years, for 10 years,
Mhm.
just started 2 years ago, just starting now. So what would it look like to build a position from here?
It depends. So it depends on which stage of life are you in. Because SCHD is more towards the later end of your life where you're looking for more income. So definitely SCHD, it shouldn't be a big portion. It should be about like 25% because there are other better dividend ETFs or income funds that you could use. I would definitely say QQQI, see QQQI, because a lot of it follows tech. So QQQI or JEPQ is usually your best bet. It's 13%, a lot better than 3. The annual dividend is 7. So if you're able to stagger that, because SHD is a little bit more stable than the QQQI. The other one is JEPQ if you want something a little bit more tech related. This one's 10%. Annual is around $6. This one actually held really well on dips. So JEPQ, JEPI, if you want something different with SPY correlation right here. So you see how a lot of these income funds, their dividend is a lot higher than SCHD, but SCHD is something that you kind of hold forever kind of thing. So if I were gonna structure a like let's say you only had $1,000, right? $1,000 to start off, then definitely, and if you're on a little bit on the younger side, I would put 30% into QQQI and then another 30 to 40% into JEPI, the follow SPY, and then a little bit, if you want to stagger it, if you only want ETFs, then definitely I would sprinkle a little bit of SCHD and a little bit into the bonds. So you get a monthly, quarterly type of dividend every month. So that's how I would do it if I was going to make it more of an income fund. If you're looking for growth, there's a lot of better ones. Like the main one would probably be VOO, but VTI is another one. So VTI is similar to VOO, but it's like it's Vanguard Total Index. So it's like all the.
So can you talk about looking for growth versus looking for income? I think that would be helpful.
Okay, so it all comes down to where you are in life. If you are younger, then definitely you want to pick one that is growth. I would try to avoid these income ones unless they're a very small percentage of your portfolio. And what I would say is that if you're a very busy person and you have income fund on it and it's a small portion, just put on DRIP, which is dividend reinvestment program for your individual broker. So you buy shares with the dividend you get per month. But if you're able to watch the market a lot better, I would turn that off and wait for a down market. So all the money that you accumulated in your dividends, you could deploy it to buy the dip instead of doing the dollar cost average every month from the dividend reinvestment program. If you're on, so the younger side, definitely I would favor more growth because you have time on your hands. You're able to weather the volatility, and it's not something that you would need your money immediately compared to someone that's in later on in life. If you are having upcoming expenses coming up, if you're looking to buy a house and you need that liquidity immediately, or that's pretty much it. So if you're looking for that, I would definitely look at money market funds, bond funds, and income funds that will pay you money. Or if you want a little bit more safer, do it a high save yielding account or certificate deposit by the bank. That pays like sometimes they pay like 3%, 4%. It's better than a savings account that pays you like 0.0001%. So definitely I would say it just depends on the individual. If you have a lot of already investments on, then definitely you may want to look into life insurance because I'm not a life insurance salesperson, but because I studied the exam, I had to study about life insurance. If you already have a 401k, an IRA, an old trading account, and you want to find out different ways to help save for your children in case, something happens, you don't want it to go to probate, you don't want them to incur a lot of estate taxes, then look into life insurance because sometimes life insurance could help pay for potential like costs such as uh severe illness like cancer, something like that could drain.
I would definitely say look at life insurance, but it needs to be earlier. So if you're 70 looking at life insurance, that's a very different answer than somebody who's 35 and like, oh, I've got a couple of kids who are young. Whole life insurance is like a savings account for sure.
Mhm. Yeah, definitely. Variable life insurance also helps too because just think of variable life insurance as like health insurance with the insurance, like just think of no, it's not what was called. It's the variable life insurance is basically life insurance with the it's kind of like how should I break this down? Variable life insurance, they have this thing called a sub account, and the sub account you could put in money and that money grows tax deferred depending on where this money is being placed in. The in the life insurance, you could pick either like S&P 500, you could pick like a bond fund. Most people pick the S&P 500. So if the S&P 500 does well, the money that is placed in that account like occurs tax, like increases tax free. So most people prefer variable life insurance, but then they like the security of whole life because it does have a cash value. The cash value on a variable life insurance depends on the performance of the sub account. So I would say those that have really maxed out a lot of just retirement stuff, look into life insurance. I wish I could provide you more details, but I'm not a licensed life insurance seller.
Right.
So I could only just advise you like those may be other alternatives for older people that want to protect their asset and pretty much send it, be able to provide it for their children after. So I know it gets so complicated. I remember studying this for the test. I'm like, why do I need to know about life insurance when when we're looking about trading? But definitely it plays a lot into just potential avenues for a person could save on taxes, be able to pass on to their property and even their stocks portfolio to their children without them getting taxed. So one thing I've learned is that on the test, there's a difference between gifting and inheriting. So those that don't know, if let's say Cedar, you have 100 shares of Tesla and then you want to either gift it to your child or inherit it. So there's something called a step-up basis, where if you gift it to your child at a certain date, you didn't pass away, they assume your cost basis. So let's say you bought Tesla at 100, they would have it at 100. But if something happens and they inherit it, that means the stock price of the day that, pass away, they inherit that cost basis. So if you're older and you're looking to transfer your positions into your children, it's better to gift them early than inheriting it. Because they get that your cost basis compared to the current market cost basis. So that's what I learned. So I'm just like, okay, in the future, before I die, I'm gonna gift it all to my child before anything
Well,
happens.
and then you have to take into account what the gifting rules are, and
Mhm.
that can be significant, but that is not something that we can answer. So that's something you have to talk with your CPA about because it can be very complicated. It's not something like, oh, just gift it now because you don't know. It really depends on the estate. It really depends on the account
Mhm.
and how much that account has gifted already because there is a lifetime gifting maximum. So I will tell you that a good CPA is worth their weight literally in gold.
Hmm. Exactly. And also setting up a trust as well for like your house, like your assets, because it'll help avoid probate. So it helps a lot. I know my parents did it as well. So there's also a little cheat with it. If you guys want to Google it, there's a way because I know some people they do trust like the people in if you don't know in Southern California, Arcadia were a lot of rich Asians and how these rich Asians are able to get into Medicare, that's they do it through trust. If if you Google hard enough, you'll know the way to do it. So I've seen that happen a lot and learned about it. I was like, oh, I wish I was that smart to go do that. But yeah, there's so much ways your accountant, like a competent accountant, will help you save on taxes. There's always a way around the tax code. So
Well,
definitely.
it's not even around the tax code. It's just using the tax code as it is designed to be used.
Mhm. Well, some people are great at it. Like how some business people can only pay what 10 million instead of their full tax liability, is through depreciation and all that stuff. So there's a lot of smart people that's able to skirt the taxes, which is completely legal. I'm not gonna lie. I feel like it's very smart. Uh, looks like we're only up like 10% on the Caterpillar,
And
but
we're sitting right at my entry from earlier. I'm just not super interested in trading a lot right here. So we are coming into zombie hours on the Wednesday before Thanksgiving. So I am probably done trading for the session, but
well, same here because I got my entry on Cat, so planning to trade this into December. Hopefully, we get that all-time high test, which I'm anticipating hopefully by 12. I think what? By 12:10. I think 12:10 is where the feds are going to announce either a rate cut or rate pause, right? I think it's this one. Yeah. Oh, they're betting on a rate cut. Interesting. That it changed so quickly. Remember last time we were talking about it was like 75% here?
I think it was probably closer to like middle 30s that's why I was asking, what it seems like that was much higher before.
Mhm. No, I felt like this was much higher, right? To keep it the same. I think last time I saw it. We probably have to check back into the recording, but I think last time it was like 75%. This one was 30. And then like I think like data came out and then I don't know. I'm like, okay, good, because the market really wants that rate cut. So
Yeah.
definitely interested
The main thing I'm watching is this daily trend line on
on which one? SPY?
ES.
Oh, ES. Okay. Well, this one I have delayed data on ES, but I,
Oh, you can have delayed data. It would be completely fine to
I,
see what that trend line is on the daily. Yeah, exactly.
okay. Oh, looks good.
Daily close above that, we are
We're off.
mm, new all-time highs.
Mhm. Well, I'm looking forward to it for my QQQ runner, and then hoping Cat does what it need to do. I think let me look at IWM really quick. Oh yeah, IWM. Wow. That looks so nice. So, well, I hope everyone has a great Thanksgiving and I hope you enjoy Hawaii, Cedar. I love it there. I've only been to Waikiki,
Wonderful.
but it's beautiful.
Oh, Waikiki is nothing. You need to go to North Shore, Kauai.
Sure. Okay.
Hmm.
Send, send me pics.
Yep, I've got them posted in the alert channel right now.
All right, I'll check it out. Well, thank you
Okay.
very much. See you guys.
Sounds good. Okay. See you next week.
Thank you.